All right, Twitter shares falling about 0.25% at this hour, even as Tesla CEO Elon Musk pulls another hint from his Twitter takeover bag of tricks. Musk tweeting last night, quote, "Blank is the night." He appears to reference the F. Scott Fitzgerald novel, Tender is the Night, perhaps yet another cryptic indication a tender offer, meaning one directly to Twitter shareholders, could be on the way. Elon Musk has been spending an awful lot of time on Twitter, just as Tesla, the EV giant he runs, is on deck to report earnings after the bell. Tesla shares falling 4.5% ahead of that report, with Tesla investors kind of worried that the Twitter takeover is going to be a distraction for Musk. What will the first quarter report bring? Joining me now, Roth Capital Partners Managing Director and Senior Research Analyst Craig Irwin, who says this stock, Tesla, is going down by 75%. But New Street Research Global Team head Pierre Ferragu, who's been recognized as the #1 ranked analyst covering global technology, has got a price target of 1,580. I got to tell you, I don't know which one of you I should go to. So let me start with Craig, because Craig, you say this thing is going to be cut by 3/4 in its price. Why, and what's going on in your mind about this?
So let's be very clear about this. I have a neutral rating and a price target that is 75% below where the stock is. I see Tesla as egregiously overvalued here. It is a great company, has transformed the automotive industry, but it is valued at more than Toyota, which sold 9 million cars last year when they sold 900,000. And Tesla does not have anything that Toyota could not bring to market very rapidly. So for me, I love EVs. I think Tesla's doing an awesome job. I think that there are far better places to invest in the sector. And they're not going to operate in a vacuum forever. By 2025, there will be 500 EV models on the road here in North America and in Europe. And just like Netflix got destroyed today because of competition, you will see that impact lay in on Tesla at some point in the future. And, you know, they deserve a lot of respect, a lot of credit, but I think the valuation is egregious and out of line.
Okay. Pierre, let me get to you. You have a buy rating, 1580 price target. The stock right now at the moment, while down, is looking at about $981 a share. Counter what Craig has just said about those issues, and an interesting comparison with the the complexities of, rivals coming out, just like Netflix.
Yes. So, I think it's an easy pitfall to compare a car to another car. And if you try and compare Tesla to another car manufacturer, of course, the valuation doesn't make any sense. Now, the difference in perspective I have is that Tesla now has clicked over a decade of experience as developing electric cars. Electric cars are have nothing similar beyond the four wheels with a traditional car, an IC car. And my conviction is that they're going to continue to have a very unique product. And indications for that is that demand vastly exceeds supply, is the number of cars they can manufacture. They sell these cars for 30% gross margins. The industry average is around 10%. And very similarly to Apple reinventing the mobile phone market with the iPhone, Tesla has reinvented the car market with their cars. And based on that, I see them growing free cash flow and other similar financial metrics by maybe 30% a year for the foreseeable future, which means that the kind of valuation multiple you see on Tesla today, which is typically trading 50 to 100 times forward earnings, is very sustainable.
Well, let me jump in and bring Craig back into the discussion here. They are expected to post a profit of about $2.26 a share. That would be up 93 cents year over year. That would be the 11th quarter in a row of profits. So they're real now. They've found their footing. However, what will you be listening most closely to in this report? And do you think Elon's a little distracted? He will be on the call by this Twitter insanity, because he's going to be asked about it.
To me,
yeah, Craig.
Sorry, Craig.
So it's really, sorry, Pierre. So This call, actually, what I'm most interested in is commentary around the foot traffic at retail locations in Europe. So I'm a big believer that we're going to see EVs accelerate even further in Europe, given that energy security is front of mind, right? Germany gets 40% of its natural gas through a certain pipeline. You know, gas prices are up, natural gas prices are up tenfold in Europe. It's a real strategic blunder problem. And a lot of people are making decisions based on what they believe is right. So I think EVs overall are likely to accelerate in Europe.
Okay.
And I think Tesla is a big beneficiary of that. And that's really the thing that I want to hear about on this upcoming
call. Well, Pierre, I'm interested certainly about Europe, but Shanghai, you know, you had about 3 weeks of a closure at the Shanghai Gigafactory, and we're waiting to see how that will affect the current quarter. Certainly, maybe they'll give us some outlook here. What will you be focused on?
Yes, absolutely. I think, Liz, you're making a very good point. The Shanghai factory closing is going to have some impact on the current quarter, on the quarter they're going to report, but most importantly on the second quarter. And everybody can do the math. Every week the Shanghai factory is not producing, Tesla is losing 5% of its quarter. It's as simple as that. Now, there is a secondary effect that we have to keep in mind, and that's going to be probably my number one focus on the call.
Okay.
That's implication for free cash flow. Because, you know, when you sell cars, what you do is you ask your suppliers to deliver supplies, you put together the car, you sell it, and then you get the money from your client. And then 3 months down the line, you pay your suppliers. And between the two, you have enormous working capital. You have cash at hand. And when suddenly you have to slow your production and you're not growing your deliveries from one quarter to the next one, you have a cash flow issue. So what I would anticipate is a weak free cash flow in the second quarter. And I think this call tonight is the opportunity for Zach, the CFO, and Elon Musk, the CEO, to make some advanced comments about that. That's what we should expect.
Craig, Pierre, lovely to have you. We'll see which one of you comes through on all of this, but we'll continue to watch it. Again, report comes out after the bell. The stock is down about 4%. Thank you both.